Okay, okay. Two. Okay, I see that some people have joined the chat map, which I think is Pat on X. Good to see you. At least I expect I recognize your profile picture. And Arnold, also good evening, good avond. Let's wait a minute for some people to join. Sounds good, perfect. Great, I'm doing fine, brother. How are you doing? Welcome, Wester Fries as well. Let's see, it's not 8 yet, so waiting a few more minutes to see if more people join. And otherwise, I'm just gonna go over Bitcoin, a few trades that I took, and then also the statistics, because it's Tuesday. So after today, we have quite a good insight of what the weekly high and low are, and how that can shape the direction for the rest of the week. So great, but good to hear. Quickly watching if this is fixed, so that is done. Then I think I'm just gonna start quickly with sharing my Bitcoin view and the trades that I took. I'm currently in a new short as well. This one, after earlier today having one stop loss right here, and then a nice winner right here, which eventually got stopped at break even. But first, let me zoom out so my thought process becomes more clear. Let's delete all of this. So we had this deviation last week where we deviated above the range high, then we moved back in the range, and we made a retest of supply located in here. No, that's the wrong tool. In here. And we just front ran, or did we tap the upper? Oh, look, perfectly tapped into that supply. So my main expectation was to see the lower high for a lower low, just purely from a range perspective, because we deviated above the range, came back deeply in the range, and then made a move back to the range high where we took a lot of liquidity right here and then actually tapped into supply. So the whole day, my main expectation was mostly towards shorts, because we have a weekly low right here, which has quite big warning signs. So there's a reason for price to come back to that low. And beside that, we also have, like, if we had a really clean accumulation model down here, then I will think, okay, maybe this is the accumulation and that this is the move for a higher high, purely because our main structure in the range is still bullish. However, we did not have a super clean accumulation model, and from here we have basically been slowly grinding up. And because we know that on Monday and Tuesday 65% of the weekly P1s form, and we have basically been moving up only since Monday, I knew that if we want to form the weekly high, that it's very likely the weekly high will be put in today. Because if after today we make, let's say tomorrow make a new high, then it is very likely that the weekly low is in and that we have a bullish bias for the rest of the week. So if we want to form the weekly high, it should be today. Welcome Sudo as well. Good to see you in the chat again. So my main view today was on shorts. So I did take a few shorts. So I want to go over those shorts. And then also the reason why for today, which was also Confluence, because we have that weekly warning on the weekly low. But also today, this is our daily low, which was put in during Asia at hour 0. So if I quickly show you an example of the chart. A fresh chart, this one for example. Then the daily low has almost no wick to the downside. So that means that price opened the day and directly went up. And price doesn't like to leave wickless candles like that. So if you look at all the candles in this range, for example, then all the wicks, or at least every candle has quite a big wick, except this one right here. You know, quickly, this lower one here is also tiny, but this one is super tiny. And it often means that either the same day or like the next day you will take it out. So big warning signs on the daily candle, which I will show you in a minute. And then if you look at the weekly candle, we also have that warning sign. Because also here you can see that this wick is super tiny compared to the other wicks. So if we go to the stats, which I have right here, or right here, I hope they are still loaded. Welcome to the new people. On YouTube, oh shit. Okay, 1 minute. I need. Let's decode. See, one. Try to hack me, guys. Oh, 6, 3. Oh fuck. 1, 9, 2, 6. Okay, we are in. Yo, you seen ES and Q? Yeah, I've seen ES. And that's the reason why I went into Bitcoin short again as well. I will take a look at it in a minute. Or at least, let's see. Yeah, clean. Model 1 distribution. 1, 2, 3, break of structure, range low. So I think that stocks will go lower, therefore crypto will also go lower. Little confluence. Let me show you the daily stats, because these warning signs are pretty big. However, here you see like how likely is that we have a P1 flip, 4.6%, super low. And also on distance, 2.1%. So unlikely that we take out the daily low. However, 94% of the daily P1s form after 0.0000. So literally on the first minute we made the daily low. And on the wick we have 97% wick warning. So there's still a great chance that we, or at least today, it shows it's unlikely, but the warnings are pretty big. And on the weekly we have that 95% weekly low warning. So that is why today I have been scouting for shorts. And then like my first short was pretty bad attempt, to be honest. Was here. So we had one. This was potentially 2 years, very local exhaustion, but I saw that a lot of longs were getting in. So I thought if longs are trapped, then I can see them. Then I can see them be used as well for a move lower. And we were building quite some liquidity. So combining that together with the weekly warning signs and daily warning signs, I was shorting it here after that 2-minute breaker structure right here. So short here, stop there. Target lower, but obviously that the one got stopped out. However, how I could have known that this was also a lower probability trade was that this was again the London pivot. So a London high, as you can see here. At that moment, this was the high. So here I got stopped out. But those are like the scalp trades, which are perfectly fine to be stopped out. And then later I took here a short on this super local 1, 2, 3 model 2. And then here a break of structure. So I don't know if I still have the short. This is the current short. Yeah, this was the short. So I entered here after the break of structure, stop above that high. And that one was a nice runner, which I skilled out on the way down. So let's see. Here it was already 3.6 and then here 6R, 7R. So this was a very tight but good trade, which I skilled out on the way down, and then eventually the rest got stopped out at break even because I wanted that trade, like in case this was our weekly high, and I wanted to have this runner. So I still had quite some open from the position, but also skilled out on the way down. So it was in the end a nice winner. But then again, price sold off, took out the range low. So here we have tap one at the low. So this is our range low. This was also our main market structure low. So if we look at the main market structure, it was this, valid on the 30-minute. And then price SFP'd the 30-minute market structure low. If we SFP a market structure low, that's a bullish sign. So here we got the reversal. I wanted to look for longs here, but price was super aggressive. So till, let's see if there was an entry. No. Like the only entry would have been after breaking structure back to bullish right here. But then you enter at the mid-range. So that was not a valid trade. So could not have gone into a long. But still nice to see yeah, these clean range rotations. And then price shot up directly into new highs, tapping at supply. However, in this move, there was no structure at all. So normally I don't like to short it because I want structure on my side. But the reason I am in my current short is still because that bias, if we're gonna form that weekly high, then it should be today. So then I know, okay, I'm being a bit more aggressive with shorts. And we had the S&P forming this model 1 potentially into supply. So 1, 2, 3. Here a clean break of structure, bearish break of structure. So the target of this distribution is at least the range lows right here. And then on Bitcoin, we had no structure to break from up here. However, you can, for a second or like more confirmation, if you don't have structure to use on the upside, you can use downwards structure, which in this case is like here. If you break structure from left to right, then internally, if you count like this, high, low, lower high, lower low, and this is your, from top to bottom, your downward structure. So then this is your breaker structure. And that is also where I entered from left to right. And then price just missed this mitigation, or did it? Yeah, it missed the mitigation. But now I'm in this one. And I'm probably just gonna let this run with my stop at this high. Right here. Because I'm pretty... at least I have profits to play after today. So then if this is the high, Then I'm gonna just slowly scale this out if we take out the daily low, which is already almost 3. And if this was our weekly high, then the target basically would be to target that weekly open, which is this low right here. So probably just gonna let this run. And then this was like a more ugly model 1. But then you see how all the markets actually behave similar. And then this was a little cleaner model 1 compared to this one. This is more vertical and this one is more clean range. And this is not really a range, or like, yeah, you can say it's still range, but this one is more in line with each other. So I'm gonna let this run to lower prices, and then is there maybe even a reshorting opportunity? We have some supply right here protecting it. See on the 5. No, it's already right here. We do have a nice block, but that was not mitigated. So maybe price, if it is so kind, it can give even a re-opportunity, in which if you get a slow move up right here, tap this, break structure, and this can be another shorting opportunity, which can be a pretty nice play. Based on the fact that if we're gonna form our weekly high, then it has to be today. Can show you that with the stats as well. So if we go to time and then weekly, then we can see that here on Monday 65% of the P1s form. So currently the low is on Monday. And on Tuesday 20% of the P1s. So combined is 85%. So on Monday and Tuesday, so right now either the low, which is this one, or the high, assuming that we don't make a new high today, either the low or the high is likely to hold. The low has big warning signs, the high does not. And if we look at how did price come up here, then this looks like, or at least it doesn't look like, this is a lot of liquidity. And we know that Bitcoin lately, it likes to aggressively move up quickly, but the moment it falls, it erases the whole move up. And this is exactly such a move where you can use all the liquidity as fuel to move lower. Could put an alert here and at the range low. This demand was mitigated, and then we have some lower demand right there. So yeah, for Bitcoin, I'm gonna let this short run purely because I already made nice profits and I want to be in a short if this was the weekly high. And then from tomorrow on, I'm gonna just play this range. So let's say we are now in this model 1. Let's say we come up here and then take out the low and we accumulate here. Then I'm also gonna play the longs if I get confirmations, because I also think that there's a case that we will reach higher levels. Purely from this perspective, where we have this structure from this low. If we count this, then we have high, higher low, higher high, higher low, higher high. So this is a super deep move back in the range, but technically you SFP the low, so then you count that not as a break, but as an SFP. So this could still end up being the higher low for the higher high. And I think a lot of people are being trapped if this indeed breaks higher, because everyone will start shorting this level. But I think there is a bigger chance that we will reach the 75, 76, then have here a 1, a 2, 3, model 1. So I'm open to all scenarios. I don't marry any bias, but that's why I like to be in kind of hedged positions where tomorrow I'm gonna look for longs, and then maybe I'm gonna let that short run, and then just play it either way, so that I'm also not biased because I want my short to win or I want my long to win. No, I'm just playing what I see. I think that's the best way to approach it. What's your average risk on scalps? For scalps, I always just I have a certain amount, and that's just 1% for me. So 1% on scalps, and then on swings, it depends if it's really a swing and it's like 3 or 4, and it depends a lot. Like this scalp here, I take another different risk as when I have a clean Wyckoff model with me, or like yeah, like it depends a lot on, do I have a Wyckoff model, do I have a super clean range play, or is it because I want to be in case this turns bearish, which is basically this trade. And then also what time frame is it? When is the high put in? Is it during London? London, I always take less risk because I know that my win rate on London is pretty shitty. During New York, take more risk, but it depends a lot on what kind of trade it is. So 3 shorts on BTC today. Yeah. 1, 2, 3. Yeah. And beside that, I haven't really watched. I watched S&P as Confluence, but I think this is just a super clean Model 1, so I think this will also go lower. Maybe it can retest this supply right here, which is untested, and then move lower to erase this supply. But overall, this looks pretty ready for a move lower. I had an eye on gold. Yeah, so gold basically looking pretty similar as to Bitcoin, where we have the range low, range high. This is a much shorter time frame opposed to Bitcoin, but then we made here the move above and now are a bit below. But my main short area, so I basically hope that this maybe comes down into demand here, comes back up, and then also like here forms that model 1. It's a bit of the deep. But here we had like 1, 2, 3, or like 1, 2, 3. Clean distribution, heavy breakdown. Then super likely for price to retest the fib levels, the supply levels, and also likely for price to see a reaction from here. So this is a super high probability area to look for shorts. So I hope to see that this was our second tap, that price comes a bit lower, so that we then basically have this. This is step 2. Then we maybe slowly come up, come back here, retest demand, and then come up here, structure up, down, break structure, and then have like 1, 2, 3, and then short it down to the range low, basically. So that's what I'm watching for gold. Then on hype, watching this local range, but during the weekend it gave the trigger for the Model 2 right here. Tap 1, tap 2, tap 3. Grabbing liquidity, breaking structure. So the long was right here. Stop there. This was like 6R, which I missed. 7, oh yeah, the entry was a little higher, around there, I believe. The tilt technical target, this was like almost a 6R. And yeah, the market maker confirmed it during the weekend on Sunday morning. And yeah, at the moment I was not watching the charts. We can also look at USDT because this is also an interesting chart where we have basically this range with like low, high, distributed. Price came all the way to the range low, and now last week this was like the range low deviation, very similar to, it's basically just a Bitcoin chart but then inversed. And then we moved up, took liquidity, sold off on the weekly open, and price came all the way back to the range low right here, taking this liquidity trail, tapping into range low demand, and bouncing, but still a little bit of a weird looking structure. It's not really clean range or really clean accumulation or anything. So it's a bit, yeah, not 100% sure what to make of this chart. Price is right now tapping into some supply. And then maybe it wants to go down and then bounce from this demand and then go higher. But yeah, we also have this VWAP clearly as resistance. Yeah, right now it's just BTC inverted, so it's not giving you super much info. So does anyone have any specific coin or chart they want me to look at? Because 90% of my time I'm watching BTC, gold, and yeah, basically ETH, but ETH is always very similar to BTC, but that doesn't give any good triggers. Also here, if I watch this, I just don't look at it because what is this for price action? Like for ETH, it's still like this is all liquidity, and here we also have still liquidity. Like BTC came into this level and ETH did not. So then I just rather trade BTC because that's for me more reliable than ETH, which is just following BTC. Hype is, I love to trade hype, but I missed the long, so I'm now watching to see, because we have basically a 1, 2, 3, so model 2, which I just showed, within a bigger 1, 2, 3. And what I'm looking at right now is that potentially price is hovering around that deviation threshold. So if it pushes above, then I'm looking for backtest, continuation long to the target of this bigger model 2. But like position wise, the best option would be that we fall back in, retrace this whole move, come back down, retest this demand, and that this was the 1, this was the 2, and that here the 3 forms for like a redistribution 3 tapper model 2, however you want to call it. But I'm not sure we will be blessed like that. And then yeah, Sol, I haven't looked at Sol. Yeah, basically all the same charts. So that's why I focus on BTC, because eventually everything follows BTC. Or we have to be in alt season, but that's definitely not the case. So this one came in this upper supply, and then we have more supply resting above. But also here this, like this is no, what is this? It's no structure. This is just like these coins are waiting for BTC to shit the bed, and then they will all probably do this, because this is nothing. There's nothing to hold price up. So that's why I rather just master BTC in every time frame. Sometimes I feel, oh wait, I missed some chat to see. Very interesting to see you get plenty of trades watching these pairs. Yeah, I think and it gives also calm of mind to not, otherwise I always feel like missing out, because there's always a pair that has a model, or always something to be found. Right now I just check these pairs and know when do I want to trade, when not. And if I don't see anything, then I can just relax. Right now record content and I don't know what. Go to the gym, go football, something. But otherwise you feel always like some kind of pressure because there will always be a coin that has interesting price action. And you don't know, every coin has other behavior. So one coin reacts other than other coins towards Bitcoin or to news events or to what. Right now I just know that how these react. So I think for a lot of people it would be good to focus more on a few pairs instead of hundreds and hundreds of coins. But that's just my opinion. Can you check GPY? Yes, I will. Yeah, sometimes I feel very overwhelmed by watching a lot of pairs. Yeah, that's exactly what I was telling. Already cut it all down to like 6 pairs. Yeah, it's great. How did you pull your range on hype? Okay, I'm gonna first show how I put my range on hype, and that because I already know why you're asking it. And then I will check GPY, which I haven't looked at in months, so then we can just start fresh. I drew this range, and then you think, why do you draw it from low to high? Probably, but it basically started from here. So let's just show a clean chart. At this point, like here, price turning up, sketchy price action high, low, and market structure is king. So your structure points should also be your range points. So swing high is your range high, swing low is your range low. But a lot of people only draw a range, think this is my range, but a range high should be your market structure high and range low should be your market structure low. So at this point, your market structure high is that high and your market structure low is this high. So then I draw my range from that high to this low. And then here I see this doesn't break above the deviation threshold. So this is step 2. So tab 1, tab 2, tab 1, tab 2 right here at the lows. And then this was the tab 3. But basically this is my range. So this is the starting point. This is step 2. And there was another, yeah, you can say locally this was like the tab 3. So 1, 2, 3 hit target right here, flew over into a 1, 2, 3 model 2. But this was my starting point. Which looks more clear than the one because in the example I started from this low to that high. But this was my starting point. And let me see. That looks really, really, really similar to this range. Because here, this is my swing high, this is my swing low. And also here on a higher time frame, this is not a break. So also here, I then extend it. And then I have 1, 1, 2, 2, 3. And also here we added to potential model 2. So like here, 1, 2, 3. And look how how they behave. Super similar to the 1, 2, 3 right here. And then 1, 2, 3, 1, 2, 3. So basically, this is just a tiny version of this bigger range. I pulled it from top to bottom and did it look as clean this way. Pulled from top to bottom and it didn't look as clean this way. Yeah. Yeah, you can, yeah. I know how, like, most people using the TCT way will draw it from this high to that low. and this range from this high to that low. But in my opinion, that's the wrong way. But I'm not gonna say that here, because then I get mad people to me. But yeah, do what feels best. I know that this is the original way to draw it, with the starting point right there and then extend it. Quickly looking at BTC, still going the right way. Okay, GPY was it? Let's see. Okay, I will just start at the yeah, like there's no right or wrong. There's just different ways of drawing it. But yeah, depends how you draw it. Okay, what do we have on the daily? What I directly see is 1, 2, 3. So this was also the range. And this was probably the range. Distributed, hit the target. Then if we look at structure, it broke structure to bearish, pulling into supply. I will draw it from here. Supply. I'm not sure if we tap this demand. Yeah, okay, so it tapped that demand. Mitigation. You're probably interested in the low time frame, but I quickly need to see what the high time frame is. Was that tapped? 6 hour. Mm, 4 hour. Include this body. Or refine it to that zone and this zone. This is probably where price already is in. Locally price broke bullish from here, from left to right, bullish break. So then locally you have here low, lower high, lower low, bullish break, higher high, higher low, higher high. But a sketchy break, so you can pull a range from here to here. Delete that. The hourly. This looks a bit like Sol, which I just showed. Like, this is just liquidity, full liquidity. Here you had actually a nice 1, 2 with a internal break of structure right here, which could have been a long after tapping into this demand. But let's see. What do we have here? Okay, how I locally would look at it is just purely from looking for shorts Because here you had a super clean 1, 2, 3, so a model 1 right there, showing that the market maker is selling. And then you can look from this range perspective. But what's more interesting is the fib levels, which are probably aligning with the supply. So let's ignore the 618. Look at the 78 and 72, which are perfectly aligning with the supply zone. And price is building a lot of sell side liquidity right here. So then you can see you have tap 1 at a high. Let's see. The question is this tap 1, this 2, and that's 3, or will this be 1? I think it's more likely to be 1. You can mark out the market structure low here. Horizontal market structure low. But I think it's more likely that this will merge into second tap. And then, for example, do this, come up, and then form like either a model 1 or a kind of local peer tree. But I'm not familiar with this chart, so that's why I don't like to look at too many charts, because like this, I don't know how this exactly reacts. You could also say this is your tap 2, this is your potential tap 3. Then if you break structure back to bearish right here, then look for the backtest and then short it all the way to all this liquidity. But I'm not familiar with FX pairs, mostly FX pairs, and also not GPY, because this one is always grinding higher, if I'm right. Yeah, so if you look at this, it's in the behavior of this coin to grind higher. So then I can say this is all sell-side liquidity that will be taken, which Bitcoin, for example, always does. But yeah, how long have people been waiting for this to be swept? So it's kind of in the behavior of this coin, apparently, to leave sell-side liquidity behind and just push higher. So who's going to say that this liquidity has to be taken? That's why certain pairs move differently than others. So yeah, I would look for shorts in that supply, but beside that, not really super clean. This also, if you look at it from a range perspective, this is your range high, this is your range low. Then we are currently at the near the mid range. So that's not a place you want to do business overall. Or it has to be super clean. But now I'm more looking at forcing a trade than that it's super, super clean. So then I would, if I had in my watch list, just set one alert in that supply. And then if I see super clean triggers, then I will trade it. Otherwise, I would just wait. Because the mistake a lot of people make is that if you see this, that you are blinded by the sell side liquidity. You think, oh, if this breaks back to bearish, and then you can often start to look very locally, because I know exactly how it works. But that's high, high, low, high, 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 low, high, high. And here you see a break structure. They think, oh, if I enter here and I put my stop at the third tab and I target all this sell side liquidity, then I have a 10R. Then I pass my funded account in one go. But that's the wrong way to look at it, because a local break structure here is not telling you anything about the overall trend, which only breaks after breaking this low. But it's easy to be trapped by liquidity drills because they look so tempting. Let's go back to the crypto, because I saw that someone Do you trade forex too? No, not really. I trade the crypto pairs, gold, and I've also added GU, so GBP USD, to my watch list because it trades really clean, according to some people. So this one I added to my watch list, but I haven't looked at it, honestly. I rather just really focus on my few pairs. And it's also because like Forex trades differently than crypto, which trades differently than commodities, which they trades differently than Forex. So either you have to direct or exactly know what the difference is in how they trade, or you just focus on either one of them. If you combine them all together, then it will influence your performances, in my opinion. The CHF GPY chart also looks interesting at the moment. Currently watching for Model 2 distribution. Okay, I will look at it after Esther because Shahid asked for Esther. And I haven't looked at Esther in a really, really, really long time. So I'm interested where it trades. I need to put my battery on, otherwise this will abruptly stop. But I think Esther has gone through the shithole. But let's see. On the daily. Yeah. Like if I had to give my opinion based on the daily chart, this is just shit. I know maybe you are asking me to watch at it because you are emotionally tied to it, but this looks just like shit. Or probably, yeah, like like there's literally nothing happening. Like how this is a range. Yeah, I first sight I already know don't trade this because people in crypto are often, oh, the market is scammy. I get manipulated. But if you trade these charts, then you are being manipulated. That's true. And then you can start blaming yourself that you're a bad trader. But this is just a chart that's almost impossible to trade. This is very bad. If you start, for example, drawing your ranges on this like this, then you will start doubting Wyckoff. But that's because this is just super manipulated. Probably there's no volume at all in this. Is there volume? No. No, so then either you are an investor and you believe in the project and then you buy for the long term. But in my opinion, these are not the coins you want to trade. I know that influencers like to call these coins because they get paid by the project or they use it to manipulate you. But yeah, this is not a tradable chart, in my opinion. Thanks, Jeffy. Let me check CHF GPY. Crazy. Yeah, all these coins are like in up only. That's why it's so much different. I like to play my ranges, but like on these coins you get less ranges. This is more trending. And that's, yeah, like super important to be aware of, because if you always draw your range from high to low, you are always looking for distributions on these coins, then they will fail over and over because you're simply in an uptrend. So if you then always look for a distribution, then you are always on the wrong side of the market. Like here, I directly see this is potentially a model 1 or model 2 distribution with a really clean return to zone in the making. So if I blindly would look at it, I would say this is super interesting. 1, 2. Is there supply? Yeah, price now in supply. So this can be a model 2. Um, let's see. Yeah, at least it took. You can refine it all you want, but price tapped into supply right here. Not sure, maybe this top. Took extreme liquidity. This is your market structure low. So break below that, and then you have demand right below it at first sight. Yeah, so you also have demand still protecting it, which makes it harder. But yeah, this can be a super clean model 2. However, probably if you're gonna backtest it, how many of the potential distributions played out? For example, if you draw your range here, you could have been looking 1, 2, 3, bam, broke higher. Here. Like basically always you can draw your range, but if you are always shorting an uptrend because of the potential distribution model, like here, these are all potential distribution models. One, this is the perfect example. Like 1, 2, 3. This one even confirmed. Huge amount of liquidity below, but you're in an uptrend. So price shut up, shoot up higher. Here, this is a deep mitigation, a deep move above. So I will not say this is a valid range, but you get the point where it is dangerous to short or always look at a distribution in an uptrend. So this can definitely play out, but market structure is more overrules ranges. So main expectation should be that this just continues. Although it is showing exhaustion because it fails to break above the range. So this could be start of a new trend, but I doubt it. I see your point. I just found out from the asset developer right now after going up for months. Yeah, that's true. It's like the first change in, like this was all like clear uptrend, and now you are building some sort of a range. But if you are in an uptrend and you start a range, then oftentimes that range is a reaccumulation before breaking higher. And right now it's showing the opposite because you have indeed naked low and all this liquidity. But yeah, the question, and also with like these coins, there's a lot of stuff going on behind the scenes, like GPY risk and the CHF not. So that's generally, especially in the current market where the Japanese yen is being printed like crazy and the Swiss franc not, then generally this should push higher. But I'm not that experienced in the underlying stuff. But there's a lot that overrules the pure chart right here. While on crypto and other stuff, often just literally the chart tells you everything you need to know. So yeah, I'm not a big fan of FX pairs. Mostly also because of that reason. I really like gold. That's showing models everywhere. Like here a model, but also last week I can show you Wyckoff models on every move right here. For example, this right here was, now you have to go to the really low time frames, but right here, range low, range high, tap 2, tap 3, and internally you broke to bullish right here, and then even here you took liquidity and then broke it back to bullish again right there. So here you had a model 1 into a model 2, where you could have longed it. And then this was during stop this. Yeah, right here. And this accumulation played out like in full. So you had model 1 into model 2, then price even came back for this demand mitigation right there. And then I longed it the next Wednesday, or oh yeah, this was on Friday where we had the news event. And then I knew we had 1, 2, 3 model 1 into model 2 with this demand mitigation. So clear market maker involvement right here. So before the news event, I even longed it. Where we had 1, 2, 3. And then I took just a gamble, or not a gamble, but stop by that model 1 into model 2 Wyckoff invalidation. And then I had to take profit very quickly because it was just a super quick win. But my main target was to target at least this liquidity trail from here. But eventually to target that high right there, which eventually played out. And then here we had a 1, 2, 3 breaker structure, back down, 1, 2, 3 breaker structure, back up. And that way you can literally on gold. Today I also hope to see a accumulation, because with 1, 1, 2, and 1, and here it took liquidity. So I hoped for this move to go down, take out the range low, tap into this demand, and then accumulate again for long. But it did not do that. So right now for gold, I'm waiting for this low right here for longs back to that supply right there. Let's erase all the models. See what the volume profile is saying. Yeah, so price is above the value area high as well. So any moves below and then a quick above can just be a mitigation of this demand, which is super clean. Right here, these two candles with then that more refined one below. So definitely interested in longs from this demand and shorts above for gold. Yeah, gold is super clean. People also say that silver is really clean, but I have not dived into it. Then I think, or at least I have said everything I wanted. We are going for an hour. So unless anyone has a specific question or a question about anything, about me, about a chart, about statistics, about anything, then I'm gonna wrap it up. Also here we can quickly watch what the order flow is saying. Like longs getting wiped. Yeah, not super interesting. We had quite a lot of, we can actually look. Do we have trapped longs still? Because that's the first short attempt I took in the morning. Was here. There's quite a lot of longs were entering. Then I got stopped and then we pushed higher. And then they got trapped. So right now you cannot really see it that well, but if I show you it right here, probably in the lower time frame. Yeah, then on the high right here and here, you see those spikes in the delta, which means that there's a lot of market buying opposed to market selling. And the moment they are underwater, then they can act as well. Sorry, I thought my YouTube glitched, but it's not. And here you can also see like longs entering right there at the highs. And now all those longs are getting wiped out already. Shorts as well and open interest as well. So it looks like the market is a bit dying off. Which aligns with my view, basically. Longs trapped here, they are used as well to move lower. And then we have to see what price does if we reach here. If I get clean confirmations, I will look for longs as hedges. But otherwise, I think there's quite a big chance that this was our weekly high and that we move lower. And also in hindsight, let's say we do this, break lower, do this, boom. And in hindsight, you will see 1, 2, 3. Oh shit, that looks pretty obvious. But yeah, I think there are no questions. So then I'm gonna wrap up the stream. Make sure to join the Discord if you're not in yet. Sharing a lot of updates through today, but also in the chats, especially the premium chats. And then I will hopefully see most of you guys tomorrow again during the New York Open live stream, or a little like a half hour after New York Open. So see you guys there, and thanks for tuning in, everyone. And we will speak to each other very, very soon again.